Most traders don't miss perfect entries. They destroy them. They jump in too early because the candle looks strong. They hesitate too long and watch price move without them. They chase breakouts after the move is already extended. They convince themselves that this time it won't pull back. And when it does, they call it bad luck. They say the market is random. They say it's manipulated. They say their timing is just off. Meanwhile, a small group of traders seem to enter calmly, almost quietly. No drama, no chasing, no panic. Same charts, same levels, same price action, same opportunities. So why do some traders consistently enter at clean levels, while others always feel early or late? It's not about having better indicators. It's not about a faster broker. It's not about secret entry tricks that only professionals know. And it's definitely not about predicting the exact top or bottom of every move. The difference is simpler than most traders want to admit. Most traders force entries because they are uncomfortable waiting. A few traders wait because they understand that patience is part of the entry itself. Today, we're going to break down why patience feels so difficult in the market, why you keep clicking before your setup is fully formed, and how disciplined traders build entries that look perfect, not because they are lucky, but because they are patient by design. Part 2. Two traders, one setup. Imagine a clean setup forming on your chart. Price is approaching a key level you marked earlier in the week. Maybe it's a previous daily high. Maybe it's a strong demand zone. The structure is clear. The idea makes sense. Now watch what happens next. Alex sees price accelerating into the level. The candles are strong. Momentum looks aggressive. He feels the pressure building. If I don't enter now, I'll miss the move. He clicks before the candle closes. No. Confirmation. Stop placed quickly, almost as an afterthought. Price taps the level, wicks slightly through it, and pulls back deeper than he expected. His stop gets hit. Minutes later, price reverses cleanly in the original direction and runs exactly where he thought it would. He leans back in frustration. I had the right idea. My timing is just bad. Now look at Marcus. Same level, same price action, same acceleration into the zone. But Marcus isn't reacting to the speed of the candles. He's watching for behavior. He wants to see rejection. He wants to see structure form, a failed break, a strong closeback inside the range, a clear shift in momentum. Until that happens, he does nothing. It feels uncomfortable, it feels slow, but he waits. Price pierces the level, wicks through, then closes back below. The next candle confirms the rejection. Only then does he enter. Stop defined before the click. Risk calculated in advance. The trade unfolds. Sometimes it wins, sometimes it loses. But his entry is built on structure, not anticipation. Same setup. Completely different experience. This is where most traders misunderstand the idea of a perfect entry. They think perfection means precision. The exact bottom, the exact top, entering before the move starts. But the market does not reward speed. It rewards positioning. And positioning requires patience. The first trap is fear of missing out. When price starts moving, your brain interprets movement as opportunity. You imagine the profit already. You calculate what this move could do for your account. That emotional projection pushes you to enter before confirmation. You're not trading structure. You're trading the fear of being left behind. The second trap is anticipation disguised as confidence. You tell yourself, I know how this plays out. So you enter before the candle closes, before the pullback forms, before the level proves itself. When it works, you feel smart. When it fails, you feel unlucky. But the real issue isn't luck. It's premature execution. The third trap is candle addiction. You start trading what you see in the moment instead of the broader structure. A strong bullish candle feels convincing. A sudden breakout feels urgent. But a single candle is not structure. It's noise inside a larger pattern. When you base entries on emotional reactions to individual candles, your results become inconsistent because your behavior is inconsistent. Most traders don't struggle with entries because they lack knowledge. They struggle because they are impatient with uncertainty. Waiting for confirmation feels uncomfortable. It feels like doing nothing. It feels like risking missing the move. But that discomfort is part of the process. The market will always move. The question is whether you will move with structure or move with emotion. Part 3. Why patience feels impossible. If waiting for confirmation feels harder than taking the trade, that's not an accident. The market is designed to test your tolerance for uncertainty, and the entry is where that test feels most intense. Before you're in a trade, everything is potential. The moment you click, that potential turns into exposure. So your brain pushes you toward action because action feels like control. Waiting feels like vulnerability. The first deeper issue is time pressure. You open your charts with the idea that you need to make something happen. Maybe you only have a few hours to trade. Maybe you've had a slow week. Maybe you missed yesterday's move. All of that compresses your patience. When price approaches your level, it doesn't just look like a setup. It looks like an opportunity you can't afford to miss. So you shorten your criteria. You relax your rules. You tell yourself this is close enough. And close enough slowly becomes your new standard. The second issue is outcome projection. Before you enter, you imagine the trade playing out perfectly. You picture price reacting sharply from your level and running straight to target. That mental movie creates attachment. You become emotionally invested before the trade even exists. When price hesitates or pulls back slightly, you interpret it as delay instead of information. Instead of waiting for confirmation, you enter to protect the vision you've already created in your head. The third issue is discomfort with neutrality. When you are flat, you feel like you're missing something. Watching price move without you creates tension. You feel behind. You feel inactive. That discomfort pushes you into marginal entries just to relieve the pressure. Being in a trade feels better than waiting for the right trade. But relief is not the same as edge. The fourth issue is ego attachment. Entering early sometimes works. When it does, it reinforces the belief that you can anticipate the move before the market confirms it. That small success builds overconfidence. Then when early entries fail, instead of adjusting behavior, you blame volatility, spreads, or timing. The ego protects itself by avoiding the deeper truth. The rules were bent. The fifth issue is lack of defined entry criteria. Many traders say they wait for confirmation, but they can't clearly explain what confirmation actually means. Is it a candle close beyond a level? A rejection wick? A break and retest? If your criteria are vague, your execution will be inconsistent. And inconsistent execution makes entries feel random, which reinforces the belief that timing is luck. Now here's the shift. Perfect entries are not about being first. They are about being prepared. Instead of predicting that price will react at your level, you wait to see if it actually does. Instead of entering on approach, you enter on behavior. Instead of trading what you hope happens, you trade what is confirmed. Define your entry checklist before price reaches your zone. Decide what invalidates the setup before you are emotionally involved. Reduce position size slightly if impatience is a recurring issue. Smaller size lowers emotional pressure, and lower pressure makes waiting easier. Accept that some trades will move without you. Missing a move is not failure. Forcing a trade is. When you start measuring your entries by how closely you followed your criteria instead of how perfectly you timed the bottom, something changes. Your focus shifts from precision to discipline, and discipline is repeatable. Over time, repeatable behavior produces consistent entries, not because you guessed correctly, but because you waited for structure to prove itself. The market does not reward urgency. It rewards clarity, and clarity only comes when you allow price to reveal its intention before you commit your capital. Part 4. The entry is earned, not chased. There was a trader who used to pride himself on being aggressive. He believed the best entries came from being early. If price was approaching a key level, he was already in. If momentum looked strong, he didn't wait for the candle to close. Sometimes it worked beautifully. He'd catch the move from the very start and feel like he'd outsmarted the market. But over time, those early entries created more stress than consistency. For every perfect catch, there were 2 or 3 trades that stopped him out before the real move began. His ideas were often right. His timing was emotional. Eventually, he made a small but uncomfortable change. He stopped entering on approach. He forced himself to wait for a confirmed reaction, a clear rejection, a break and retest, a candle close that proved the level mattered. At first, it felt like he was missing everything. He watched price move without him. He questioned his decision to wait, but something subtle began to shift. The trades he did take felt calmer. His stop placement became clearer because structure had already formed. Losses felt cleaner, not rushed. Wins felt earned, not lucky. He didn't double his account overnight. He didn't suddenly become perfect. What changed was his relationship with the entry. He stopped trying to be first and started trying to be correct according to his rules. Over months, his trading became quieter, fewer trades, less screen time, more intentional clicks. And that quiet consistency did more for his account than all the aggressive early entries ever did. This is the identity shift most traders avoid. The impatient trader sees entries as opportunities to capture movement. The disciplined trader sees entries as moments that must meet criteria. One chases the candle. The other waits for confirmation. One trades anticipation. The other trades evidence. The difference looks small on the chart, but internally it changes everything. When you stop defining yourself as someone who catches moves and start defining yourself as someone who executes rules, the pressure around entries disappears. You no longer need the exact bottom. You no longer need to feel clever for being early. You need clarity. You need structure. You need behavior that you can repeat tomorrow, and next week, and next month. Here's the sobering truth. Perfect entries are rare. Clean confirmations take time. There will be days when price moves without giving you your exact criteria. And on those days, the professional does nothing. Not because there was no opportunity, but because there was no confirmed opportunity according to their plan. Waiting is not weakness. It is selection. If trading feels frantic, you are probably forcing entries. If every move feels urgent, you are probably trading anticipation. But when entries start to feel deliberate, almost boring, that's when you know patience has become part of your edge. The market will always offer movement. It will not always offer clarity. Your job is to wait for clarity. So the next time price approaches your level, pause before you click. Ask yourself whether you are reacting to movement or responding to structure. You can keep chasing candles and blaming timing when it fails. Or you can define your criteria, accept missed trades, and let the entry come to you. The perfect entry isn't something you grab. It's something you earn by waiting. And if you want to keep building that discipline, keep following the channel as we share more other insights, trading stories, and trading motivation tips on the future videos.